Welcome to another episode of Rec Talk, Season 2. We're well into Season 2 now, aren't we?
Yeah, how long are you going to say that for?
Hey?
This will be like
that's my catchphrase. Yeah, that's my catchphrase. We're well into Season 2. Yeah, until we get to Season 3, and then it's going to be like, we're well into Season 3.
Started,
yeah.
Well, I'm disappointed I didn't make it onto Season 1, I'll be honest.
Well, you cancelled a few times, didn't you? Didn't you? You cancelled a few times.
wasn't me.
Yeah, so Bobby from Content Business Finance. How you doing, Bobby?
Yeah, really good, guys. Thanks for having
appreciate you coming down.
Thanks for
all the way from sunny Wolverhampton.
Yeah, we've just spoken about for 20 odd minutes talking Walsall, Bradford Arms and everything.
Bradford Arms,
yeah. Shout out to Bradford. Is it still going?
Yeah. It's still probably the most popular sort of like Indian mixed grill in Walsall as well.
It's really odd. Like really the front of it is just like a really old boozer with like Marley bar staff, and then you go around the back and it's just like a proper Punjabi dabba.
Is that kind of like what the what's that place on
the Vine?
No, the place that fucking hell, Hillsborough Common.
Oh no, nothing like that at all.
You was about to say the Vine at West Brom.
Yeah,
that's another good place.
See, I like the Vine because again, it's like that's like busy, happening, that kind of thing. Yeah. Bradford Arms was just odd. Think about like a lad from Cov who's already a bit nervous about being in like Walsall.
Why?
And he's like, yeah, let's go in here. And I'm like, it's a bit ropey. No, it's good. We're eating in here tonight.
That is the tough part of Walsall.
Are you sure about this as well?
It's Pleck.
Yeah. And we walk in and the barmaid stood there like, right. And I'm like, this is the best place in, like, okay, you know. He's like, no, go through the back. And again, it's not much to look at either, is it? So you sit down and then it was like, let's go for a fag. So you walk out the back, past the kitchen where you see this like little auntie making roti on, like, you know what I mean? Like, and she's like, I'm like, what is going on here? This is like somebody's house, like the back end of somebody's like Indian house. And then like the food come out and it was amazing. And I was like, I get it. Yeah. This makes sense.
You can see why it's popular.
Yeah. There was constantly people going in and out.
I think you're not really selling it.
No,
it's worth a visit. Yeah, it's not a nice part of Walsall, but it's worth a visit for food.
The food was great. It's more, think like Cushy Grill in Cov, but just like really, really ropey.
Do you know what me and Nathan saw on TikTok the other day? What was it, like an all-day brunch, bottomless brunch thing, but like Indian food.
It's a lot of food.
That is a lot of food.
That's a lot of food.
Yeah. I can never finish a mixed grill.
Yeah.
It was like naan breads, there was like samosas, bhajis, there was everything, wasn't there, Nave? Like, there was so much in there. And me and Nave, and then free booze as well, included.
Free booze?
Well, not free, is it? It's included, it's paid for. But yeah, I mean, you're paying 30 quid. It's in Manchester.
30 quid.
30 or 35 quid. And
that's
it's like,
worth the drive.
That's not bad value.
Yeah.
If that's booze as well. Yeah, that sounds too good to be true.
I mean,
they'll be out of business.
Let's test it.
Don't worry about it.
Yeah,
let's
get Rec Talk on the road.
Rec Talk on the road. Yeah. Pause this podcast.
We're off.
So, Bobby, you're quite the expert in the old invoice financing and commercial finance world, aren't you?
I'd like to think so. Yeah.
How long have you been in the game?
So we've been going for just over 4 years.
Mm-hmm.
Yeah. So me in particular, I focus on invoice finance facilities or anything asset-based lending wise. So we don't just deal with recruitment agencies. Naturally, because it's invoice finance, 60-70% of our clients.
It was created for recruitment, weren't it? In the sense of how the two kind of walk hand in hand.
Yeah, 100%. What is it? That cash hungry, isn't it? Like it's fast paced, cash hungry to keep people, temps paid on time.
Yeah, lower risk lending as well because everything's audited and sort of
timesheet driven.
Yeah,
so it's every. I think before starting the podcast we said that invoice finance is every lender's, sort of.
Wet dream. You can say wet dream.
I can't say that just yet. Maybe later.
No, we can say.
but recruitment is is every invoice finance lender's favourite sector simply because of how secure the debt is normally. Because obviously it's timesheet driven. You've got the actual client / debtor signing off a timesheet every week, of which the invoice the following week is then raised off the back of.
And you couple that in with like bad debt protection and all that sort of stuff, and the lender's relatively
you're talking my language now, bad debt protection.
Well, to be fair, we had no clue about invoice finances, so we came out, and we didn't realise actually when we were at Michael Page were actually invoice financing as well, and we were like, fucking hell, this is a £1 billion FTSE listed business.
The big boys do.
But why? But then it makes so much sense because if you think about it, most invoice financing facilities are below, let's say, 5%, roughly.
They all should be.
Yeah. So if you're
anyone out there who's paying more than 5%, get in touch.
Definitely.
We're just so that we're not kind of killing Paul Coody from Zerda, but we're paying way below that, by the way.
But we've had one approved with Paul probably 45 minutes ago. So we deal with that. Good guys.
So most are like sort of 5% below, aren't they? And if you think about like how much does it cost you for a credit controller, how much of your cash is actually going to be spent funding the temps and all that sort of stuff. Financially, it just makes so much sense to have invoice financing facilities in. because it's not, and a lot of people don't realise that you don't even have to use it. So we don't.
Oh, you don't have to draw down on all the cash.
No, we had an experience where in our naivety, decided to rush through a temp placement, and for whatever reason, we chose to go outside of our invoice financing agreement, which wasn't Zodiac; it was another company at the time. And we were like, we'll just payroll the temp ourselves. We'll just payroll the temp ourselves.
Yeah.
And
on the guys that the client was like, look, we're going to get you on the PSL, and everything's going to be signed and terms sorted within about a week or two. So you'll have to fund it for 2 weeks. And we're like, we can eat that.
That's it. That 2 weeks ended up becoming 6 weeks. And
which is a long time to then.
It wiped our cash flow out. Yeah. We were like panicking at one point. And we were like, what the fuck have we done? And that's one temp.
Yeah. But the thing is with recruitment, you're only one phone call away from having an extra 5-10 lads out. Yeah. And all of a sudden, no cash in the bank, and you need invoice finance.
Or you have to turn the business away because it's like, look, I can't fund it. I can't
which is an awkward conversation to have with any client, isn't it?
Yeah, of course it is.
I know a few, because again, through the Rectals thing, I speak to a lot of recruitment business owners, and a lot of the kind of the 1-person, 3-person businesses just don't do temp. And whenever I'm like, how come we don't do temp? And the answer is always the same, always, without a doubt. And it's, I can't fund it. I haven't got the cash for funding temps.
Yeah.
And I'm like, wow, there are that many, and these are established business owners that have been doing this for 6, 7, 10 years.
That understand recruitment.
But they still don't understand that actually there's this facility out there that would alleviate all that concern.
Yeah. But unfortunately, invoice finance lenders, because it's similar to recruitment, it's unregulated.
Yeah.
They there's 97 different lenders out there, as of last week anyway. But there's that much terminology floating around. They don't make it easy for any businesses, not just recruitment agencies, to understand.
Well, actually, the calculation isn't really simple either, because you have things like service fees, and you have the actual rate, and what's above Bank of England.
Yeah.
And
do you remember how confused we got with the whole? We got asked the question. We were doing what we do best, right? We're salespeople, and we went off and brokered a better deal, and we went to our current supplier and went,
"What can you do?
Match that,
yeah,
or beat it, or we're leaving." And it was like, right, one thing I need you to clarify is it gross or net, and is it VAT on the gross and VAT on the net? And we were like,
and that was Simon.
yeah.
Simon J.
Yeah. So me and Simon used to work with each other.
Simplicity.
No, Hitachi.
Many minutes ago. Yeah. So he was at Hitachi at the time when this conversation happened, and we'd got all this, and he's like, yeah. So this is like. He was selling it as that he was selling it as net, weren't he?
I can't remember.
Whatever the situation would it's actually gross on gross invoice.
Fine, yeah. All I know is that question, and we were like, oh, we're not as clever as we think, man. We need to really think about this.
we had to speak to our accountant, and we had to do all sorts of weird and wonderful stuff. We were like, make this make sense to us, because right now all I'm seeing is all of a sudden I'm paying 20% more than I should have.
Yeah.
And they're like, no, but you're not though, because that's VAT. And it's like, right, so we don't have to pay that. Well, no, you do, but you can claim back. And it's like, just how much is it going to cost?
Yeah, because I'm looking at this and it says 5% here, and the new deal says 3%, and that to me, in my simple head, means the 3% is better. And they were like, yeah, but actually the VAT that you're paying on this is on the gross, whereas
you're paying 3% on the gross invoice value on that deal.
Yeah, that's it. And I was like, but 3%'s lower. Like, do you know what I mean?
Yeah.
So the lenders don't make it easy. So in your world, I guess you're going to have to deal with idiots like us, where you're like, right, guys, this is the easiest way of doing it.
It's that's our job. So our job is literally to first of all translate, but go out, compare the market for agencies and other sectors, and first of all get them the best deal, but also introduce them to a lender that they can get along with and also understand. Because again, with invoice finance being unregulated, there are a lot of lenders out there that simply recruitment agencies need to avoid.
We moved away from one,
such as.
I won't name them, but to give you an idea, out of the 97, we'll probably only deal with 60.
Oh, okay,
so we know them all. Yeah, we'll know them all. But
so in theory, you guys whole of market. Yeah, fine.
But that's because some of them are really sharky in the way they operate. Because the one thing that always put us off moving from 3-hour great is just what we needed at the time when we moved on from them. We kind of we outgrew what we needed, didn't we? And they just weren't able to service what we needed them for. But the whole relationship that we had with them was great. But when we moved on from them, our biggest concern was the nightmare stories that you hear of. They withhold all of my margin because one of my clients hasn't paid.
Yeah.
And because of that, all of my other temps aren't getting funded. And we ended up experiencing that, didn't we?
Yeah.
We ended up, it cost us the best part of 10 grand a week for a significant period of time, didn't it?
Yeah, scary times.
and we were lucky that we had the cash flow to do that. But actually, if we were in a different position, we wouldn't have been able to pay our temps, and possibly could have ended up out of business.
Yeah. But you mentioned obviously when a client doesn't pay, obviously that's an impact to your business as it is, because that leaves those invoices to go into what's called disapproved. But what a lot of companies don't realise is that the lender's still taking that money away from your availability, what you can draw down on that week. Mm-hmm. Most of the lenders are also charging you for that every month until that invoice has been settled. Yeah. So because it's the main hidden fee associated with invoice finance called a refactoring charge. Yeah. It's criminal.
Which is basically just like, it's like an overdraft facility, isn't it? Where you're paying a percentage on kind of what the outstanding debt is.
Well, it only applies normally the 5th.
On bad debt.
The 5th of the following month. But it's anything generally that goes over 90 days, you get penalised for your clients paying late. So not only has it impacted your cash flow for your clients paying late, but you're also paying for that.
So dumb it down for us in kind of like, explain it to I'm going to use your phrase, explain it to me like I'm a 5-year-old, right?
Okay. So invoice finance for a recruitment agency.
Yeah, so there are let's say 3 or 4 different types of fees and sort of all the shit that's involved in there.
Yeah,
right?
Depending on what lender you go with. There are some lenders, of which you're with one now, that can offer that bundle fee solution.
Shout out to Paul Cooney at Zodec.
All in. So literally, and even with Zodec, most of their facilities, there's no monthly minimum fee. So when a recruitment agency is quiet, you don't pay any mins. So literally, you're only paying a flat percentage per invoice. Minimum fees, yeah. So most lenders will either get charged the service charge, which is a flat percentage per invoice, or a monetary value monthly minimum fee. But when you're quiet, obviously they're not earning the money from the service charge. What the lenders do, they whack this monthly minimum fee on your head as opposed to the percentage of the sales.
Well, because they've got to make something at the same.
That's mainly the banks, isn't it, who charge you like £1,000 or whatever.
They have. They've got to break even at some point. But I think what some invoice finance lenders, in particular what I call the pay and bill lenders that only really lend to recruitment agencies, what they've done well is that most of them don't charge any monthly minimum fees because they know that recruitment is a high growth sector. They're better off charging that bundle fee facility, so it's all in. Yeah. Because, like I say, it only takes you to have one phone call, land one contract, and all of a sudden your temp business has gone from there to there. And we see it all the time.
Let's talk fees then. So fee structure. What is the service fee?
Service charge is a flat percentage per invoice. With most lenders, it's charged against the gross invoice value.
Okay, so I've got 5 temps out, and I'm invoicing a total of £10,000 a week. Yeah. So what would the service fee cost me on that then? Well,
it all depends on forecasted turnover. Generally, most lenders base their rates on. Okay. So if you're talking a annual turnover of, let's say, let's work on £1 million, for example. If we're working on a bundled fee facility,
let's work on 100,000 because I'm conscious that there are going to be small agencies out there who are in and around that space.
Yeah, these are the ones that need this education piece, right? There's people out there that are like one person and 100 grand is like a good month. Bear in mind that at the minute they're probably a good year because at the moment they're perm heavy, and they're not going to do £1 million worth of fees.
Yeah, okay. So on 100 grand's worth of sales, that's when you're probably talking anything between 3.5% and your 5%. Because obviously the lender, like you say, they've got to earn money somehow.
Yeah.
So depending on which lender, the service charge, which some lenders, the pay and bill lenders in particular, generally, just charge a flat percentage per invoice. So on 100 grand's worth of sales, if you'll be the lender charging you 4%, that'll cost you £4,000 for the year.
Yeah,
that's
And is that charged at the end of the year, or is that charged monthly? How does it work?
It's charged every time you upload an invoice. So depending on what type of facility you have. Again, invoice finance is the sector. Then you've got different types of facility associated.
You've got factoring discounts, that sort of stuff.
Exactly that. So you've got invoice factoring, which includes credit control. So you've got the funding and the lender also doing the credit control, picking up, chasing debtors. You've got invoice discounting, which is the confidential version of invoice finance. So I know if you've got clients that don't necessarily, if you've got recruitment contacts that don't necessarily want their clients to know that they use an invoice finance facility and want to keep credit control in-house, invoice discounting, is probably the solution for you.
And that's the cheaper one normally, isn't it? Because
credit control's turned off, but there's a little bit more admin associated with that invoice discounting because you have to be able to produce management accounts generally every month, and the business has to be quite reputable,
sizable enough.
Exactly that, and not all the case. There are some lenders out there that can do small deals.
If you're a perm heavy business that's like, well, I've got a client who wants me to do 5 temps, and I really want this business, you're not going to go down the invoice discounting route because you're going to say you're going to have an honest conversation with the client and be like, look, that's fine, but I will have to invoice finance, which means
Exactly
that you're going to get chased by Bibby or whoever,
Yeah.
right? And so you can almost prep that conversation. So,
But for the businesses that don't fit the bill for invoice discounting, like you said, the smaller businesses,
Yeah.
some of those agencies still might want to keep credit control in-house
Yeah.
because they
Yeah.
don't want a lender, in a sense, pissing off their clients.
You don't know how aggressive the credit control is.
That's a really key point,
Yeah.
actually, because again, that's one of the bits of kind of hesitations that comes up a lot when I'm talking to these guys about. So how come you haven't got any temps out? Well, I don't do temp. Why don't you do temp? I can't afford it. Right. Why haven't you looked at invoice financing then? I don't want my client being pissed off and being chased if they were a day late paying.
Yeah.
Because I know my client will be a little bit late.
You don't want to jeopardise those
That's it.
relationships.
Yeah. Because again, if you're a business turning over 100, 120k a year, you've probably only got a handful of clients that are regular clients for you.
And you're working hard to win that business.
And that's it. And you maintaining that relationship is the hardest part.
Yeah.
So absolutely, you can't put that in the hands of a third party who, and obviously, bad news travels a lot faster than good
It
news,
does.
right?
Yeah, of
So
course it does.
you're always going to hear about the times where that invoice financing company annoyed that supplier.
Yeah.
So going back to this then, so you got 100k, 100k agency. Guy's just started up 6 months ago, right? And he's all girl. They've got 5 temps that they need to go out. They're a 100k turnover business. We've identified that ID isn't going to work for them, and there's probably not a lender that's going to offer them ID based on what they've got.
There's a few out there now. Yeah, if you'd have asked me that question
A year ago?
3 years ago, I'd have said no. Nobody's offering CID, a confidential invoice discounting facility, also known as CID.
Yeah.
Nobody's offering that business a CID facility. But there are a few lenders out there now, because again, especially in recruitment, it's a kind of a young person's game, and accounts packages are available now to every business, no matter what size. So you can still produce management accounts, just like
Clicking a couple of buttons.
exactly. If you're on QuickBooks or Xero or Sage, you can still produce that P&L, that balance sheet, and provide that management information to the lender on a monthly basis, just like a big business
they can
could.
draw that information themselves, can't
Exactly,
they?
yeah,
Again,
exactly.
with the nature of this sort of software.
But the facility that not many sort of clients that we speak to are aware of. So you've got factoring there, which includes credit control. You've got invoice discounting there. That's the confidential version, no credit control. There's a facility which sits in the middle, which is kind of a hybrid between the two. So for smaller agencies that don't fit the bill for invoice discounting, there's still a chance for them to maintain all relationships with the debtors, with their clients. It's called CHOCS, stands for Client Handles Own Credit Control. So it's the same as invoice factoring, so it's still fully disclosed. So the recruitment agency's debtors, the clients will know that they're using an invoice finance facility, but the only difference is the lender doesn't chase the invoices. They leave that with the client.
That been around then?
Always.
Always.
Yeah.
Okay.
Again, it's an education piece. Lenders don't.
Yeah.
Really-
Well, I wondered
really
if that
sell
was a reaction to the feedback that they've probably got, which is, no, you guys keep chasing my debt too hard, and I don't want you to.
Unfortunately, it's always been around. But yeah, it's just having somebody
I think it's a
to
risk
translate it to say, well, you don't fit that bill. It's generally
That's the key, though, isn't it? Is having a broker who can go to see an agency, understand the client and what their needs are, and then go to a bunch of lenders and be like, right, this is what you need to offer me because this is what my client's going to take.
That's all we do. We paint the picture to the lenders, get the quotes in, and we don't let the lenders bombard our prospects at that stage straight away, because unfortunately, like I say, there's 97 different lenders out there, of which we won't go out to obviously the whole market. We'll go out to a handful of lenders who we think is a good fit for the client.
You'll do a fact find and be like, right,
Do the fact find.
I think these 6, 7, maybe 10 are suitable. Let me reach out to them, tell them about you, see what they've got, and then come back to you with a proposal of, here's 2, 3 options.
Exactly that.
Here's the one I think, but
we'll always put 2 or 3 options over to the prospect, and then obviously translate the charges, because again, unfortunately, the invoice finance lenders do use different terminology for all the different charges, but at least we know what they're talking, so we can then translate it to the prospect.
Yeah. So let's say this particular agency goes down the factoring route.
Yeah.
Okay. And we agree then that the service fee is going to be what, 4%.
Yeah.
Yeah. So that's going to cost them $4,000 a year. But would that be then if they're doing a $10,000 invoice every week, is that $4,000 on that $10,000 invoice every single time they upload an invoice?
Well, a business that is doing $100,000 turnover, if they're doing $10,000 a week, that's $500,000. So I'll get them a better rate than 4%.
Yeah, fair.
But yeah, exactly that. So if it's on $100,000 worth of sales, if you're talking $2,000 worth of turnover a week, you're talking 4% of £2,000.
And this is where the forecast and the management account piece comes in, and that's so important, right? Because
the lender can then
you might
forecast what they
currently
make out
up
of it.
until historically be I'm a 100k turnover business, but actually I now have a client who wants me to get 10 temp runners out, and that's looking at the figures, I could potentially be up at £500,000.
Yeah.
So let's kind of work somewhere in the middle and kind of keep constant track of that by me producing management accounts for you, or keep you in contact to be like, actually, that's what's working.
It's always nice for the lender to see how the business they're funding to is performing. But with invoice finance, again, I'm having probably this battle with lenders on a weekly basis at the minute. Invoice finance facilities, the lender security isn't actually with the client they're funding.
No.
It's with who they're getting paid by, which essentially is
the end client.
Is the end client. Is the debtors. So the security more so. We want to be dealing with creditworthy end clients, creditworthy debtors. But the bigger the business, the more money out the door, that's when providing management accounts, for example, so they can see, P&L and a balance sheet to see how the business is performing, to keep an eye on it, to make sure they're not overtrading and all
so
sorts
outside of then service fee, what other fee then would I, as this agency, expect to pay?
So on that size, I'd probably go on a bundle fee facility of 4%.
So the whole thing, credit control, the invoice, the invoice discounting service, everything included would be 4% all in.
So the fee to compare
we'd aim to get 4% without bad debt protection. That would be.
Okay. What's bad debt protection?
So it's insurance on your invoices. I'm not supposed to call it insurance because I'm not a credit insurance broker, but technically it's credit insurance.
Okay.
So if one of
it's some form of assurance.
So if one of the clients went into liquidation or administration or any form of insolvency, it can be claimed upon. So it gives recruitment agencies peace of mind that who they're supplying temps or perms to, and that one of their clients goes bust, they're insured.
Now, for clarity, though, the invoice factoring company that you choose to go with aren't going to deal with every end client, are they? So they will do their own due diligence. They will run credit checks. And
that's correct.
Actually, there may come a time or a point where they'll say, no, we're not going to fund this.
That's correct, because, again, the lender security is pretty similar to the agency security. They only want the agency to be dealing with creditworthy debtors who are, good at paying the bills. If we get it all the time. Recruitment agencies ring us up. Existing lender won't support this particular client that's rang us up who wants an extra, 50 temps. But the reason why they probably rang the agency up in the first place to, ask for 50 temps is because another agency's invoice finance companies probably cut the credit limit, and now they need to go elsewhere to find these 50 temps. But if they were good payers and creditworthy, yeah, exactly that. So unfortunately, we see a lot of smaller recruitment agencies really chase turnover and go after. Obviously, when a contract like that lands on your desk, you really want to fulfil it. But do you want to fulfil it by having that exposure to a debtor, a client that isn't good at paying the bills? Because again, I know you're passing the invoice over to an invoice finance lender that could be giving you, 95% of the gross invoice value, but these lenders normally take also guarantees on facilities as well, and they don't want to be coming after the directors on a personal guarantee for them overtrading with the debtor they shouldn't have been in bed with in the first place.
Yeah.
But we see overtrading a lot, especially in recruitment, but just because one lender can't get
in the early stages of the startup stages, because again, you come out of big agency mentality, right? Which is, I remember a handful of times where Michael Page's credit control team would email me and say, look, your client hasn't paid on this placement. Can you either provide us a better point of contact or can you make the phone call? And I used to be just like, I don't give a shit. I've put my guy in or my girl in. I've been paid my commission. I don't give a shit, mate. Whether you get paid or not, it's not my issue. And as bad as that sounds, that was my mentality. And if you've got that mentality kind of working big business and then you go into sort of doing it yourself, a little bit of that changes. But then you also, I remember a point where we used to kind of be like, a client would ask for 30-day payment terms, and knowing that 3R would prefer 14 days, and I'd just be like, yeah, that's fine, 30 days is fine, because I'm like, him ain't me. I'm getting paid. 3R are going to pay me.
Yeah.
And if I've got to say to them, look, I had to go 30 days. Yeah. Let's just, and we would say, like, Bobby, I could do 30 days, but you got to pass a credit check.
Yeah.
And if they pass a credit check, I'd be like, look, guys, what do you want from me? There's no benefit in me pushing 14 days. That benefits you.
But again, a lot of recruiters don't realise that an invoice finance lender's typical, what we call recourse period, which is basically how long the invoice finance lender will fund the invoices for, as a standard, is 90 days.
Yeah.
So we'll always get our clients 90 days end of month as a default, because most lenders offer 90 days date of invoice, but they can always just flick a switch on and turn it into 90 days end of month regardless, and not really impact on the charges. But again, if you want to work to 14 days, fantastic, you're getting the money in quicker. If you want to work to 30 days, obviously you're getting the money in, but it gives you the option to potentially push it out to 60 days to land some bigger contracts.
That's right.
The other thing as well, though, taking into account things like the payment terms, is if there's a 10 grand invoice, a lender is most likely not going to give you that full 10 grand up front.
No.
What they'll give you is 80 or 90% normally, won't they?
Yeah. But that's when my mentality shifted, though. So when we moved away from 3R, who were releasing, I think it was something like 90 or 95% of the invoice, and the remaining was their fee. So there was nothing else to come short of the VAT SOP. Right?
Well, we were getting margin only payments though.
That's what I mean. Yeah,
okay, so on a weekly basis, then just forging the margin.
That's it. And it wasn't until we moved to a facility where it was like, right, when we place the candidate and we put it through the invoice factoring company, we get 60% of the invoice, and then when they pay, we get the remaining 38%, for example. It wasn't until that point where I was like, okay, we probably need to stop telling clients I don't care if you pay on time or not. You know what I mean? That's when the mentality shift ends up happening. But
when in terms
again,
of prepayment,
it takes owning a business and looking at your finances before you get confident enough to be able to think like that. If you cast your mind back to when you're not in that kind of business ownership
dealing
world,
with it,
you have the same mentality of like, I don't care. Like,
done my bit.
Or I don't know. You know what I mean? Like, I don't know what to do here.
Because this is why some recruitment consultants though don't necessarily make good business people later on. But if they do care a little bit about the back end, or have staff that care about the back end, it just makes things so much easier. But in terms of prepayments, you mentioned in recruitment, because it's every invoice finance lender's favourite sector, that's when you can get your 90, your 95% prepayments. So that's prepayment is basically what you can draw down on an individual invoice. So £100 invoice, 95%, 95 quid on day one. The remaining £5 will be made payable back to you once your client pays. Obviously, you guys get it. But there's, again, certain sectors, I spoke to one this morning in construction. It's been passed to me by a service provider in recruitment. So the introducer's a payroll provider who's passed me this construction client. But unfortunately, he kind of told the construction client they can expect to get 90%. So anybody in the invoice finance world will laugh that a construction client that is full on application for payment, stage payments, can get 90% of the gross invoice value on their invoices. You're talking like 50%, 40% maybe in that sector. But it's just down to the risk associated with it. But the reason why you get 90% in recruitment is because there's less risk and lenders like it.
So how many of the recruitment business owners that you've helped historically then have referred kind of things like construction clients or some of their clients over to you guys?
It happens, So generally with recruitment, the directors that we're dealing with, they're good sales guys. They spot opportunities. So if they can see that one of their debtors is a slow payer, for example, that might, because they're a slow player, might mean that there's an issue there with cash flow. Introduce them to Bobby, go and find some sort of solution for them, which can help the whole trade cycle. I think what fits well with us, what our recruitment clients like, is that we're not just recruitment. Like I say, 60-70% of our clients are in that space because obviously it's invoice finance.
The industry,
but we can look out for opportunities for them also. So if we see one of our transport clients all of a sudden wins a big contract, needs XYZ drivers, pick up the phone to my recruitment client, make an introduction. Construction, I know there could be a big project that somebody's working on next month, but 50 other labourers are needed. Again, we can pick up the phone to our recruitment clients and help them. Because unfortunately, a lot of our other clients in the past haven't liked using agency staff because they've had a bad experience. But just because you're going to have one bad experience with one agency doesn't mean you're going to have the same experience elsewhere. So.
No, and also the industry that you're in as well. I mean, it's you're speaking to people's kind of like most vulnerable part of their business, which is their finances, right? And most business owners will kind of lie or hide their cash flow problems. And you're dealing with people who have acknowledged that they have a cash flow issue and they need to kind of look at that or ways to improve that. So there's already then a level of kind of faith and trust that's being built. So actually, when you're then saying to me, listen, you need to deal with Sean because he's in your sector, recruits in it, and he's really, really good at what he does, I'm going to take that for a lot more value than kind of somebody else or him calling me up being like, oh, hey, like, you're right. I noticed that you've done this and I've noticed that you're hiring,
A recommendation is always good. As you can imagine, these clients already are trusting us with their debtor book, their sales ledger, so we can see a list of their clients.
And also, and ultimately, it's their clients, isn't it? Because if you're going down the credit control route, then what they're trusting you with is handling the relationships that they've built with the level of sensitivity.
Yeah.
Well, look, our finance manager, she does our credit control, and she started off like an absolute pit bull. And she'd go after all these different, like anyone that was like a minute outside of payment terms, she'd be on them. And I was like, Lauren, look, you need to calm down.
Calm down a bit.
Yeah, because it takes us so long to build these relationships that, okay, if somebody's a day, 2 days late coming back to us, then don't worry about it. Let's just see how it goes.
Yeah.
Now she's getting to that point where she calls every time. She's like, look, they're not paying. This isn't going right. This is what's happening. Can I turn the screw? I'm like, yeah, go for it.
Yeah.
But it's that education piece, isn't it, of how
yeah,
hard
because
it is
it
to build
depends
that
on the industry in which they've come from, right? Which is, again, if you've got an invoice financing company that are heavily involved in recruitment and understand the recruitment industry, then you'll find that they won't be like that. I mean, like Lauren is
nature of the beast.
Yeah, her as an example, she came from an industry where the business she worked for were the lead supplier in what they did. So they absolutely could be like, right, Bobby, unless you pay, I'm putting you on stop. Like you aren't doing any more work with us, and therefore we're the only ones that supply this product. So tough shit trying to find it from somewhere else.
Yeah,
that doesn't work in recruitment because there's fucking 38,000 recruitment agencies like chomping at the bit to work with people.
Yeah,
and clients know that.
Yeah, well, I think we touched on earlier. It's what, a £43 billion market. Mm-hmm. I think my market's been the invoice finance world being a £3 billion market. You guys. Monsters, but there's that many other agencies that if you let somebody down, they can just pick up the phone to somebody else,
and they will. Yeah,
they will.
But I suppose that's the same with the invoice financing world as well, isn't it? Really, because I mean, if those people that are in the know, like us, we know invoice financing, we've known it for a while. If our invoice financing provider lets us down, like they did, we pick up the phone and we just like, yeah, okay, look, we need to find someone new. Yeah. We need to get away from these guys because they're a detriment to our business. Mm-hmm. And one of the things that I said to Paul. And to be fair, that relationship has been exactly like that, which is like, look, as an extension of our business, as an extension of our finance team, I should never have a phone call where you're the subject of that phone call. You should always be a hidden partner in the background. I shouldn't even know you exist. Yeah. And somebody coming from the outside in shouldn't know that they exist. If I'm having constant conversations about my IF provider and I'm constantly
cock up
headaches.
If the subject
as business owners, you haven't got time to be dealing.
No, if the subject of my conversation is constantly, oh fucking hell, my invoice finance provider, they're the wrong provider. And I think it's important for a lot of recruitment businesses definitely to know that there are options and it's easy to get out of. Although one thing that let us down, and Paul really helped out with that, was because we were factoring. 100% of our debt was funded, wasn't it? And when you move from factoring to
the pay and bill
discount,
solution.
yes, so only 90% of the debt is funded. So
therefore, doing the payroll, the back office, and everything with the previous lender.
And then because we were moving over then from somebody who did 100% of ours to 90% of it, it's
old
like
school.
Yeah, well, this is it. And then all of a sudden it's like, well, okay, your debt book is X. Yeah, we can actually only buy 90% of that. Yeah. And it's like, well, okay, but that leaves us in the shit then because we've got 10% of this debt that we need to fund.
Does. And with, again, I don't know too much about the company. I've spoken to them before, but I don't know too much about them. But with pay and bill facilities, because you're only receiving that weekly margin, you're only receiving that weekly margin in your own bank account. Mm-hmm. So if you ever wanted to sell your business in 5 or 10 years' time, and you've got somebody coming in to have a look,
show the investor the bank account.
They're going to think, you turn over X, Y, Z. What's this about?
Where is it? Yeah.
And even worse with the principal facility, where sometimes the lender is raising the invoice as ABC Lender Limited trading as you guys. Technically, that's not your contract with the debtor. Technically, that's not your invoice. Technically, they're not your sales. So it just doing the route you do now.
That's key for people that have got to a point with their business that they are looking for a potential sale. You know what I mean? But there are a lot of lifestyle businesses out there, a lot of lifestyle agencies out there. I think there's some really key stats on there that I wanted to just sort of point out. You mentioned obviously £43 billion market, but actually 36% of that is temp revenue.
More than that, 36 billion.
36 billion of that.
My mistake. But 36 billion of that is temp revenue. The majority of the revenue in recruitment is temp revenue. Yeah. So if you are a small agency, which by the way, I mean, 80% of recruitment agencies in the UK, of that nearly 40,000, are less than 10 employees. So are micro businesses and quite likely to be one person, two person businesses. Yeah. If you're that one person, two person business and you are only in the perm market, and the reason you're only in the perm market is because you're scared of this world, then you're missing out on a big chunk of revenue, a massive chunk of revenue. And if you're sitting there going, I'm really struggling at the minute, or things aren't quite going right, because again, I'm speaking to a lot of these business owners who are like, how are you finding the market? The market's really tough at the minute. I've got clients changing their mind. People are taking longer to do things and so on and so forth. People are struggling right now. And if you're not doing temp, where that's where the money is, then you kind of
recurring revenue, isn't it? You need recurring revenue.
It's a self-fulfilling process.
And that's the business that is scalable to sell. A perm agency, if you're not billing 1 month, there's no real, unless you've got those repeat clients, which
not just to sell though. It's retained revenue, right? So you can, if you are a lifestyle business owner, which there's times where I wish we were, and you've like, well, I've got my 50 temps out, and I'm making $5,500 profit for me every single month. Yeah. I haven't got to pick up the phone for the next 2 weeks.
Whereas a perm agency,
with a perm agency, you got to the 30th of the month,
back to
scratch. And they're like, oh, that was a really good month. Like, first of the month, right? Well, look at the board, nothing. Right,
but a lot of lenders won't fund perm, will they?
That's correct. Yeah, so most invoice finance lenders don't like perm recruitment because of the security on the invoices.
Rebates.
So exactly that.
Start dates, that sort of stuff,
as you can imagine, if a lender's funded an invoice and then all of a sudden the perm that the agency has placed into ABC Limited leaves after 2 weeks, the invoice finance lender's thinking, well, what happens to our invoice? Who's paying our invoice?
Yeah.
What most invoice finance lenders don't understand is that rebates generally don't really come into play because most perm agencies offer a free replacement before anything gets clawed back anyway. Yeah. I see that probably 9 times out of 10. Before any money gets diluted, you generally just get a free replacement and the bill doesn't change. Mm-hmm. But lenders are scared of that billing change.
Well, because it's in the terms.
Yeah.
And historically, whatever happened.
Yeah.
And you can give me 100 examples of that.
And again, it happens.
Yeah, that's it.
The client's well within the right to draw on that as well.
Yeah, exactly.
They can say, look, and we've seen in the past where it's like, no, I don't want a free replacement. I just want you to give 50% of my fee back.
Yeah.
We're fortunate that we've never rebated a fee.
No.
We've had to do 1 or 2 free replacements in the time that we've been going, but we've never had to rebate a fee.
Yeah, but it's rare. But the invoice finance lenders, unfortunately, don't get that, and that's why most of them can't stand perms. We're doing one at the minute. It's a perm agency, but it's all export, so that all the perms they're placing is a different country. Mm-hmm. But the actual agency themselves don't want to raise an invoice once the perm started. They want to raise an invoice when the perm gets accepted, because then it could take the perm 2-3 months to actually move abroad, start.
Right.
But they want to raise the invoice at the front end, whilst everything's in the UK, whilst the actual debtor has said, yes, we want XYZ to start in 2-3 months' time. And we've even been able to place a lender that is okay on perm acceptance as opposed to perm start date.
Wow,
it's a tough one. Yeah, there's only probably one lender in the whole of the market.
They won't be doing that long.
But it's a good business. No, it's a good business. It's a good track record, and they had a facility that did that many years ago. But unfortunately, that lender then came out the market, and they've had to go down funding invoices on when the perm actually starts, as opposed to when they get accepted, which is 2-3 months down the line. So yeah.
So in a nutshell, then, invoice finance is effectively business overdraft, isn't it? For all intents and purposes, in that you just have a pocket of cash that you can really draw down on.
No. It's not. Only because you can only draw down on sales invoices. So an overdraft, you've got whether you're busy or not. Whether you're busy or not, you've still got that lump of cash sitting there.
But the theory that what you're saying there is in the you stop looking at an invoice as cash that's due to come into the business and actually start putting a value on your invoice. Your 10 grand invoice is worth 10 grand to these businesses, and they'll buy that 10 grand invoice off you for a fee.
In recruitment, like a loan, an overdraft isn't a suitable funding solution for a recruitment agency because they don't grow with your business. No. Like I say, it takes you to have you guys to take one more call. All of a sudden, somebody needs an extra 10 temps out next week. Mm-hmm. Your overdraft that's sitting there might only be XYZ, but all of a sudden you need twice as much of that for payroll in a couple of weeks' time. Mm-hmm. Whereas an invoice finance facility can grow with your sales invoices. As long as you're busy, you have more access to cash, and that's why it's most suited to recruitment agencies, because it kind of grows with them.
So let's talk about post-COVID market then, because obviously the COVID and the kind of the lending spike that happened during that time was a bit of an anomaly, right? Because we asked Paul this same question. What's the trend that you're seeing? What type of inquiries are you getting? Are they big businesses? Are they people moving suppliers? Where's the bulk of your kind of business coming from at the minute?
In terms of lead gen, we do all sorts, but in terms of inquiries, we're seeing a lot of distress stuff. Yeah, seen a lot of distressed businesses, not necessarily in recruitment, but all over. But
distressed in the sense that they're not happy with their current supplier, or they're struggling.
Both.
Okay.
Yeah, both. But again, a typical example is the banks.
Mm-hmm.
So if you don't fit the bill with the banks, they'll manage you away.
Yeah.
The deal we've had approved this morning is a managed away from the bank that I placed with the bank because it had to be price driven, competitive at the time. During COVID, business has still done well, but traded with a debtor that the bank doesn't like, which again, in recruitment, neutral vendors is a good talking point because this business isn't technically recruitment, it's facilities management, which is still timesheet driven, still technically the same. But the bank that the facility was with, they didn't understand the debtors. So with neutral vendors, RPOs, they don't realise that the facilities management industry, cleaning and security, is all going down that neutral vendor, master vendor route. We've placed it with a lender that understands that won't restrict them in terms of cash anymore.
Right.
But in COVID, in terms of recruitment in particular, we was quite lucky. We did probably more business during COVID than post-COVID, simply because we had a lot of successful recruitment consultants starting up themselves.
Yeah. And you had a lot of people having the time to think. We certainly had. You had loads more time. And that time, you could spend it crying, bitching, moaning, or posting videos on LinkedIn about how this will only last for 3 weeks and we'll be back to normal again. Or you can actually sit down and plan out a business plan of like, right, here's where we want to be when we eventually come out of this mess. Here's where we currently are. Now, what do we do in the middle? What are the things that we need to change, adapt, move in? And actually, Invoice Finance was one of the things that we sat and went through in great detail when we decided to move away from what essentially was our incubator. They did our back office, they did our fucking website and everything. You know what I mean? Like they handheld us through the first couple of years.
Yeah. Which there is a space for that facility.
Yeah, it was great.
Until a business gets to a certain size. We're doing a deal for local business, recruits purely into construction, no other sector. He'll probably see this video because he's hot on LinkedIn as well. He'll post it on LinkedIn. But he's coming away from a pay and bill solution, of which they do the payroll. They've got the timesheet portal to upload the timesheets. They do the back office. They even raise the invoices for him. But he's got to a certain size and stuck with them. But the new facility, if he carried on, he'd probably pay about £220,000 a year on the pay and bill solution. The new facility is going to come in at about 60 grand, including bad debt protection, including insurance.
Massive.
Huge
But I really do struggle to get my head around it sometimes. So I know, and I'm thinking of 3 business owners that I speak to a lot who went through that incubator model. They work in a very kind of like profitable industry. And
I love it how you call it an incubator model.
They're very good at what they do.
Yeah.
But all 3 of these guys, when I've spoken to them, are like, no, we don't do temp. Temp is where the money is in their industry, right? They're in engineering, manufacturing, logistics, and they don't do temp.
They're going to be asked the questions, though, surely from their clients, that have you got any?
All the time.
Yeah.
All the time. And like on top of that, they're giving away somewhere between 15 and 25% of their invoices on the perm side. And I'm like, but you've been going for longer than 5 years now. You're out of your commitments with them. You're not tied in anymore. Why are you restricting your own growth? And because as you speak to them around, over a pint or over a coffee, they all want to grow. I want an office. I want a staff. I want to grow and scale my business. I'm like, the person you've got into bed with then is the one that's preventing you from having that happen then.
Yeah.
Because they're not going to fund temp. They're restricting you from doing temp where the money is in your industry.
Yeah.
And, you're like, you're giving away chunks of your like hard-earned money and invoices to these guys, and for what?
Yeah. And do you think that a perm recruiter, do you think they can get more impacted by what's going on in terms of the economy, in terms of things shutting down? For
100%.
Like during COVID, being a perm recruiter, if you was perm only, scary times.
It's yeah.
Well, when we sort of went into lockdown, we had and at that time when we went into lockdown, it was just the 2 of us. We just hired one person, didn't we? So there was 3 of us, but he was a total newbie. So really, it was just the 2 of us. We had about 10, 12 temps out, and Nitin was covering Coventry and Warwickshire. I was covering Birmingham, and we had probably about 5, 10 jobs each that we were running. Things were really kind of in an upward trajectory for us, and we got to a point where it was like, right, everything's in lockdown. Our temps overnight went.
Yeah.
And then we got to all of the jobs started being pulled one by one. They were just being pulled and pulled and pulled. And it's like, then we started looking at each other thinking, shit, we're in a situation now where we've got really no live jobs.
Yeah.
All of our temps are gone, and our revenue stream is completely cut dry. What do we do?
Yeah.
And that's where I suppose coming on to the next topic is kind of access to funding.
Yeah.
Was a big player, because actually before that we tried once or twice to have a look at what funding options were available to us, but you go to the bank and the banks would be like, yeah, no, not for us.
Well, they didn't want to know.
Yeah.
And the ones that did want to know were like, and not a braggy thing, they'd be sniffing around my property portfolio straight away.
Yeah. Yeah.
Sniff,
They want the bigger picture.
Oh yeah, they're like, oh yeah, that's fine. Are you both homeowners? Yeah, both homeowners. Do you own any of the properties? And he'd be like, yeah, my business partner does. And they're like, oh, what does he own then? And I'd be like, listen, no, that's not part of my business. Like, what is this? And they'd all go, no. We just for clarity. And then the proposal would come through, and all of a sudden they're like,
yeah, we want
to put
securities on this.
All of a sudden they're interested
or some sort of charge on it. And I'm like, no.
But I think first point of call for most people when they start a business is the bank. The invoice finance market is run by brokers. So in terms of, there's a lot of middlemen that do what we do to obviously, but most of us do actually do the right thing. Although it's unregulated, most of us do the fact find, paint the picture to the lender, and then obviously present the quotes. But unfortunately, first point of call for most new start businesses is the bank. But even the independent market, they're competing with the banks nowadays. So you'd think you're going to get a better deal from the high street bank compared to going,
do you know what the driver for us?
It's not always the case.
A driver for us is industry experience, massively. When it comes to invoice financing, 100%, it was always a case of no, we want to deal with people that know recruitment and deal only in recruitment.
Understand recruitment, yeah. Which is where I use that the lender you with 100%.
Yeah, they're great at what they do.
Yeah.
When it comes to access to broader finance, so if you're talking just sort of general lending, commercial loans, asset-backed loans, that sort of stuff.
Yeah.
Then what you need is a broker who is able to sell what recruitment is.
Yeah.
Because service-based businesses, because we don't have any physical assets as such, short of, I mean, if you own property, great, okay, whatever, but you don't have machinery, you don't have cars, you don't have anything like that.
And a typical recruitment business or a typical recruitment business owner sometimes live, nice lifestyles and take a lot of money out of the business. So their balance sheet doesn't look appealing for the banks, and then they're not fussed.
Yeah, from a traditional lending perspective, it makes absolutely no sense, right? Yeah.
So what's the appetite now then for small businesses to be able to get access to either asset-backed or non-asset-backed funding?
The banks are tightening the belts. Yeah, so the banks are certainly tightening the belts, but there's a lot of other solutions out there. Obviously, that's our job to put businesses in contact with the most suitable lender, whether it be the bank, building society, independent lenders. There's all sorts of solutions, but the appetite's certainly there within the high street banks. Not seeing it just yet. There's a few banks out there. A typical example, during COVID, there was only one high street bank open for new business bank accounts, which I think is criminal. Especially when I know you hear them say all the time that the backbone of the British economy is UK SMEs. For only one high street bank to be open for new business bank accounts.
And even they had a backlog.
They did, huge backlog. But
because again, a lot of these guys were opening or changing bank accounts based on things like the bounce back initiative and like the grants and stuff.
Well, if you had a tied business bank account or but the bounce back loan scheme wasn't available.
No.
Do you know what I mean? So a lot of people were trying to switch banks, and then the banks were busy giving C-bills loans out and bounce back loans out, free money, which has been great for businesses, but in terms of recruitment, the bounce back loan scheme in particular, I'd hate to think the impact of it deep down, because obviously payroll providers, some payroll providers, how they set things up. There's hundreds and hundreds and hundreds of little entities that are just about trading that might have had also this 50 grand bounce back loan that none of, I don't think that we know half.
We'll never know. And they'll come down hard, and there's stuff in the media at the minute.
It's frightening.
Certain people are getting taken to account and how to account for it and whatnot. But the fact is, it was. Well, I have a different view on it in that I feel like the government let SME business owners down. We fell through the cracks, and I think that if there are then people out there that took out 20 bounce back loans for these dormant businesses that they had because the banks were just pushing them through because they're being forced to. I think there's more people in the government that made a nice tidy sum for them for their own friends and family that it doesn't really matter that if there is a businessman that or businesswoman that's done that, fair play to them, because we didn't get furlough, we didn't get okay, we'll get 80% of your salary. Yeah, we didn't get those comfort blankets that a lot of people in employment had.
Yeah.
And so
even that was hard to understand.
That was yeah. But in my mind, I'm like, listen, if there are people out there that are taking the piss, but fair play to them, more power to you.
Yeah.
I wish we would have thought to do it.
Well, we're no accountable. We were sending people out a newsletter just to let them know what was going on, because it was changing every couple of weeks as well.
Furlough for directors, because most directors go dividends alongside their salary. It's low salary, high dividends. It was like, well, no, you're only going to get 8% of your salary, which is, for most was like 12 grand, maybe 10 grand or something like that. So it's like, hang on, you're going to give us 8 grand over the course of like however many months. That doesn't work for me.
Yeah,
and
it's not going to touch the sides.
Yeah, and look, with the bounce back loans, it was just literally if you're trading anything over 250k, you can get 50k or something like that, wasn't it? And that was
it was kind of up to 50k. You can get 20% of turnover, so everybody was kind of saying 250 to get the full 50. But C-bills, there was a little bit of due diligence done behind it.
They had more time with that one, whereas the bounce back one,
it was just a case of get it out as quick as you can.
Within a day. You were getting people, you were seeing people getting paid 50 grand into their business bank account within a day.
Did you ever hear about that guy that was scamming the motor trade using the bounce back scheme?
Oh, with the Porsche. I've heard the Porsche story.
So he'd gone around and done a few bits, but he'd basically like, I'm going to pay the money into your account. He'd take the bounce back loan on behalf of the dealership.
Name.
On the but he paid 50 grand for a Porsche that might only be worth, let's say 45. So, and he'd automatically pay the dealership the 50, isn't it? But the car's already been delivered.
No. So what he was doing was he would go in. So let's say you own the dealership, right? Yeah. And I'm like, I've seen this Range Rover. You've listed it at like 35 grand. I'll buy it. I'm going to buy it through my business. My business is called BBL Limited or whatever. And then you take the bounce back loan on behalf of the business. I just need your bank account details, blah blah blah. Take the loan. The loan gets transferred into your bank account.
They think that's money for the.
They think it's a transfer that's coming from.
But it's not. It's actually you taking a bounce back loan. Now you're out 30k and you've given me the car.
And you've got the stock as well.
I saw that at a Porsche dealership. The story I got told was the same story. The car was actually delivered.
It was delivered.
It was. So he did this a few times. On exactly that. Crazy. It was just whatever the value of the vehicle was the value of the bounce back that he'd get paid into the account, and then just be like,
and he just kept doing that across like 5-10 dealerships, and all of a sudden it was like, Jesus, I've got like a fleet of 10-20 cars, and I haven't paid a penny for them.
It's criminal.
Mad, isn't it?
Criminal.
So appetite for lenders, if I'm a recruitment business now, so if I wanted to get like a mortgage, invoice financing, if I wanted to get kind of any type of asset or non-asset backed finance, what's the appetite like then? If I'm a small business, sub $1 million or something like that.
Well, again, we're a commercial finance brokerage, so I do invoice finance. We've got other people that can specialise in other products, but commercial mortgages, tough time at the minute. Obviously, property prices haven't really come down. Obviously,
on the commercial side, they haven't yet, have they?
Not yet. Yeah, not yet, which is...
I find that a bit fishy.
It's got to come down eventually. But yeah, obviously, the Bank of England base rate at the minute is 5%. I think Well, say this on video, but probably go to 6% in a couple of months. But
there's talk about it up to 7, isn't there?
Well, they keep saying every single time they do it, they're like, no, this will be the last one. This should be the last one. This should be the last one.
But unfortunately, again, going back to invoice finance, with the back, because obviously if they're offering a bundle fee facility, some of these lenders, with that Bank of England base rate keep on constantly creeping up, that bundle fee facility is leaving them a little bit exposed because they're paying for their money. That's what a lot of business owners don't realise, that a lot of these invoice finance lenders out there are having to borrow their money from a bank to then essentially lend out.
So why wouldn't a recruitment business like ours, why wouldn't we just go to like Aldermore Bank or whatever the bank do all the lending? Why can't we just go there and be like, all right, we want to take up invoice financing facilities?
There's nothing stopping you, but whether they then turn around and say you're a good fit for them,
their preference is going to be to deal with a Zodec or a Simplicity or a whoever, or one of the other 95. Their preference is going to be to deal with them because they've got the business model there.
The one lender you mentioned there,
because it's so different to going. Why wouldn't you just go straight to Mondelez and buy chocolate from them?
True.
Do you know what I mean?
The option is there though. So like Aldermore, for example, I could go to Aldermore and be like, right, okay, I want to use you guys as
I want to set up an invoice financing business.
You are 9 times out of 10 you'll get a better deal coming via a broker because the lender knows that they can't pull the wool over our eyes, if that makes sense. So I'm not saying all lenders would do that naturally, but salespeople who are working for these lenders have got targets to hit.
Scales of economy as well, though, right? If I'm an invoice financing business, I'm like, listen, Aldermore Bank, I'm going to give you over £1 million worth of business a week, and you go along and go, I'm turning over £1 million in a year. They're going to be like, hey, bro, you're paying this, and these guys are paying this. You know what I mean?
Exactly that, but there isn't stopping any client doing that. But because we don't charge for our services, it's a free of cost compare the market. So that's why we see that most especially within the recruitment sector, use some form of broker to go out and obviously source the facility for them.
So if I'm a business owner sat there now and I'm like, I've got all these plans, I've got all these like hopes, dreams, aspirations of all these things I want to do, but cash flow is my problem.
Yeah.
Do you want these guys reaching out to your team and going, right, I want to buy the unit in which I'm operating from. I want to take out I want to take out a loan to buy a load of furniture and office furniture and that kind of thing, but also I need some for my cash flow because I want to hire 6 members of staff and I want their salaries covered for at least the first 3 months, and so on and so forth. So
that's Bobby's lottery, that isn't it?
I'm thinking like, where's this guy?
No, but here's the thing, though, right? But they are out there, right? They are, and I can tell you now from experience, these guys are out there. What they don't know is that there is a brokerage service who can sit down with you and be like, tell me where you in an ideal world, where do you want to be, and what risks are you willing to take, or what level of guarantee are you willing to put in, what are you willing to give away from where you are today as a one person sat in your attic, running your perm heavy business, to the dream that you want to be a 5 person, 5 headcount business in a Birmingham city centre office. Okay, how we can get you there, but let's map that out for you. They are out there, so those sorts of inquiries you guys want, right? You
100%.
You want to hear from these people.
100%. Obviously, initially, I want to be looking at the cash flow piece.
Of course.
After a typical recruitment owner, we'll look at the invoice finance facility. Other forms of funding a recruitment business, I don't agree with, but 9 times out of 10, it'll be invoice finance. If they've got, they potentially might want to build a buy-to-let portfolio. We can't do residential buy-to-lets, but nobody should be doing a residential buy-to-let anywhere now. They should be sticking it in a limited company for tax purposes, so we can help advise on that. But also, if they want to potentially purchase their office they're currently in, commercial mortgage could be something we could look at, or they want to refinance 20 computers, which most asset finance lenders don't like because it's a soft asset and obviously computers break, but there are lenders out there that will touch. But there are lenders out there that will touch, soft assets as well. So for a typical recruitment agency, we can not just help with the cash flow piece, which that is most of our work, I'll be honest, but we can also add a little bit of value.
Years down the line. Lenders jump all over that. I mean, every time we've had a look at, there was one particular broker who I won't name, but we would never ever work with. We'd looked at a couple of different options in terms of like commercial mortgages and all that sort of stuff, and every single chance he got, it was like, but he needs to pony up his portfolio, and also, why don't you give us your invoice financing? If you give us your invoice financing, the lenders are more likely to give you
give us your invoice financing, and then I can get you a really good deal.
Let's get you hooked in, and then we'll look after you.
I was like, listen, the property portfolio isn't on the table. Don't even ask about that again. No, fair enough. And then you go away, you come back with I've got a proposal, but they do want to put a charge on your property.
They want securities. They want securities.
Suck my dick for fucking I don't care.
It's the broker's job to not only get you a good deal in terms of rates, but to make sure you're not giving anything away. So like
find my corner.
That's our job. That is any broker's job.
You're the broker. You're the one in the middle, right? Yes, you're going to fight. You're going to get them. Your panel the best possible customer, but equally, I too am your customer, right? And it's what was frustrating was it was like. It's the same in recruitment. As a recruitment consultant, my job is to find you the best job that's right for you, but also find my client the best candidate that's right for them, and broker that deal, right? And it felt as if this one was like, look, I really only work for him. Like, I don't really care. Like, if you want this job, you need to take a dip in salary, be in the office 5 days a week, and you got to work a 45-hour week. Like, do you know what I mean?
Yeah.
It was almost like you haven't
very one-sided, wasn't it?
Yeah,
it was very one-sided.
You've not listened to a single thing I've asked you yet.
And this is the thing. Whereas when you deal with a broker, what you want is to be able to say, right, here's my situation. This is everything that I need you to make happen for me. Now go tap into your network and go tap into your expertise around what it is that we've basically asked you to do for us.
Yeah.
And come back to me with
which most of the time will be director level with some of these lenders as well. Again, we will deal with BDMs and salespeople on the ground, and most of the guys we deal with are great. But sometimes, a typical example of the lender you're with, if I'm speaking to Paul direct, he's got a bit of clout, and when the prospect sees that they've got the backing of the MD of the business, it's an easy sell.
Makes a massive difference.
I could speak about this particular lender for an hour in terms of all their USPs, but do you guys see, like, obviously in terms of shortages within the recruitment world, like, do you see many real opportunities for recruitment agencies in certain sectors?
I think within certain sectors where there's no recruitment experience, there seems to be an uptake of like care workers deciding actually, do you know what, I'm gonna run my own care agency.
Yeah,
or
we see
construction guys or drivers saying, yeah, okay, look, do you know what, I'm gonna run my own thing because I have the network, I'm connected to candidates. Those guys seem to be making a splash in the market, but we had this conversation the other day.
Labour heavy industries like the care sector, like the driving sector, like warehousing and that kind of thing. Sure. Historically, have always done really, really well.
Yeah.
I think we differ on this in that I don't think that's where the future is. I think that if you are in any vertical in recruitment at the minute, you need to really be in things like the tech industry. Because it's so vast.
And where it's going as well. It's only going to get bigger.
Yeah, that's it. Yeah. And actually, sales recruitment as well. Things like SDRs and BDMs and that kind of thing. Yeah. Because that element of the job, I think those two industries are being improved by AI, not replaced. Whereas I think we've made such leaps and bounds in just the space of 6 months this year already.
Yeah.
I can see us being sat here this time next year and there will be lorry drivers and delivery drivers out of work. There will be warehouses that have been fully automated.
Yeah.
There will be customer service centres and contact centres that are just run by AI. There will be. And so those that have really made hay while the sun shined have now got to think, right now, where do we focus our attention?
For me,
but not everyone agrees with that.
Yeah,
I understand why.
I disagree to a certain degree in that I think for a lot of these, in any profession, recruitment, brokerage, whatever, right? It all is based on the strength of your relationship and what you can do for your client, right?
People buy people, don't
they? Yeah. Look, there's a reason people buy Audis over Dacias, right? Mm. And there's a reason that people will use certain types of services over others. There's a reason why most people don't want to bank with like a Monzo or a Tide or whatever and prefer to go with a more mainstream bank, or why people use certain lenders, right? Because there's a level of service that they expect and they get. And if they don't get that level of service, then there's a route to kind of fix that issue. Mm-hmm. And I think it's the same with agencies, right? If you're sitting here as an agency thinking, oh, fucking hell, things are really going bad, like my clients are not working with me and blah, 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 it's because you did a very transactional job in the first place. If all you did was service a head of accounts, or if you had a management accountant that came in and was like, oh, okay, here's your management accountant, oh, cheers for my $5,000, that's it.
Yeah. It's the same as you, right? If you were like, hang on a minute, I've got a portfolio of customers here, 10 of them that I did business with this time last year, and I've now found out that all 10 of them have gone to other vendors and other suppliers, but they've gone through a different group of brokers. The common denominator is you. So really, the first place you should be looking at is, what did I do wrong? Not going, the industry,
the market.
People are a lot more savvy now. They're going to, what I did was educate these guys in the world of brokers, and now they've gone and found new brokers. No, you did something else. So maybe be a bit harder on yourself. 100%. And I think that a lot of recruiters aren't hard enough on themselves in terms of like truly reflecting on, okay, what is working and what isn't working.
Yeah.
But I do think there's an element of, you've got to look at kind of overall industry trend and sort of see, well, where is the direction going? Because look, the fact of the matter is, things like the care sector, whilst yes, there's a lot of placements being made in that world, there are also a massive shortage of candidates because of things like Brexit and the immigration issues that we're having at the minute.
NHS is like the 5th largest employer in the world, isn't it?
Yeah.
And there's still shortages there.
Yeah, that's it. So... Right, well, look, I think we're coming up to the hour mark, aren't we? Yeah. So I think we need to wrap it up because we're probably only going to have 3 viewers left at this point. How do you guys prefer people reach out to you?
Online via the website, phone. Yeah. Contact Business Finance. So we can be found on Google.
Cool.
Yeah, we're not too good on social channels other than LinkedIn, but it's only because of me being a bit of a dinosaur. But yeah, on the website you'll find our details.
Great stuff.
Thanks for having me, gents.
No, I appreciate you joining me.
Cheers. Thank you.